Well, just like there is the stock market here in India is held out against what's happening in the rest of the world, the currency market has also done that with, of course, a fair bit of help from the Reserve Bank of India, which has been defending that 80 level, but not anymore. The rupee is at a new record low, that is, against the dollar, 81, and Latha is here to tell us more. Latha.
Well, 81 was on the cards, one, because the rupee closed at the lowest point yesterday, 80.86. And in New York, in the NDF trades, already 81 had been hit. So that is not the surprise. The shock for the market is actually the Reserve Bank intervened all of yesterday, all of Thursday. It was offering, and there are some people giving fantastic numbers, like maybe even 3 billion was sold. But the point is, that was the hunger for dollars yesterday. As we know, there was a goodish bit of portfolio outflow. Apparently, there was also some M&A related outflow. So if the number is not as large as 3 billion, it is fairly significant. So in spite of the intervention, the market has gone where it went, above 81 as of now. There was a slight stoppage in the fall of the dollar yesterday, the fall of the rupee yesterday, when the BOJ intervened, which is, one in several decades event. Because of that, people shorted the dollar. And those short positions got covered by end of day. And that also led to the sharp spike in the end of day trades. For the market now, it's just that what is RBI doing? I mean, if the RBI normally doesn't intervene when there is genuinely outflows happening, why would you want to get those guys to get a good rate? Let them pay more. So they would normally stand out. Yesterday, they did stand in to smooth the sharpness in the market fall. But now, if there are continued genuine outflows even now, the Reserve Bank may just allow the market to find its own level. At one point where they feel that now there are speculative longs being accumulated in the dollar, they can come in and do a slam dunk. But, that is when the market will also sense that enough is enough. At the moment, I couldn't get a single dealer to tell me, is 81 a support, is 81.25 a support, is 81.50 a support, is 82 all the way. People are not guessing because these are not technically doable. This is just where the Reserve Bank might think that, okay, now it is getting speculatively long for the dollar. Just a word on bonds. We aren't talking enough about that. It is almost a rate hike that has happened. If you looked at the OIS market, it's almost 25 basis higher from what it was before what the Fed announced. Everybody is coming to terms with the fact that the Fed is a terminal peak rate at 4.6 was not guessed by anyone. And interest rate differential is a real thing for any central bank. And therefore, now a 50 is getting factored in or has gotten factored in. That's why you're seeing this 25 basis move in OIS markets and almost 20 basis move in the spot markets as well. It's continuing. We were at 723 on the 10-year before the FOMC. Now we are at 738. So fairly sharp impact.
This is a big sell-off, Latha. Thank you very much for that. So that's a pretty comprehensive look.